Welcome to My Money Buddy, the monthly update in October 2020. From October 1st, 2020, there are going to be many changes that are going to be implemented, and I'm going to be talking about some significant changes. The first one is to do with health insurance, where there has been a standardization of products that has been provided by the regulator. They are really trying to make the policy more inclusive, less complicated, and more attractive to customers. So the first thing that has changed is the coverage for the uncovered ailments. Earlier, there were ailments like mental illness or psychological disorder or illness contracted due to a hazardous activity, which were not covered under insurance. Here on, these are going to be included as well. There is a new definition for the pre-existing disease. So any disease or ailment that was diagnosed 48 months before the issuance of the health cover will be now termed as the pre-existing disease. Earlier, this limit was for 3 years. Any new condition within 3 months of buying the policy will also be treated as a pre-existing disease. So for example, you buy a policy and then you're diagnosed with diabetes within the first 3 months, then that is also going to be treated as a pre-existing disease as far as the policy is concerned. The insurance companies will also not be able to deny claims towards advanced treatment techniques. In some of the policies, these were not covered, but do check if there are going to be any sub-limits on these particular treatments. Further, insurance companies cannot reject a claim after 8 continuous years of coverage, except, in case if there's a fraud or something like that. Now, the waiting period for treatment of lifestyle diseases has also been reduced to 90 days. So in case of diseases like hypertension or diabetes, the waiting period is essentially going to be 90 days. Telemedicine is going to be included, and given what we've seen on COVID, we do expect that telemedicine is going to continue to grow. So telemedicine consultation is also going to be included as a part of the policy. And the insurance companies have to settle claims within 30 days. And finally, when you are porting the policy, then the older waiting period is also going to get counted as part of the overall waiting period. So there have been a lot of good things that have been done from a consumer perspective, but we do expect premiums to go up because, now with so many more illnesses being included, so many other things getting standardized, certainly the premiums are bound to go up. But remember, health insurance is a necessary expense. There's really nothing that you can do about the premiums increasing other than just pay up for it. The other big change that has been made, that for foreign remittances which are above 7 lakh rupees, there's going to be a tax collected at source at the rate of 5%. So for example, if you're making remittances above 7 lakhs for education, then there is going to be a 5% tax collected at source. The small savings scheme rates remain unchanged. So PPF, Senior Citizen Savings Scheme, Sukanya Samriddhi, NSC, the rates remain unchanged. And finally, on debit cards and credit cards, you will now have to opt in if you want your credit card to work abroad. Automatically, the cards that are going to be there are going to get disabled for international transactions. So you will have to opt in for those particular transactions. And within your limit, you can decide what is the sort of transaction limit you want to set up in your debit or credit card. Make sure you click on the bell icon to subscribe so that you can get all our updates. I do hope you've checked out our videos on NFA reviews. Look forward to receiving your feedback. Till then, bye-bye.